What is going on, guys? Welcome back to Trading Learning 101. I got another playbook play for you guys. This playbook play is revolved around inverse ETFs. The importance of learning about inverse ETFs and what ETFs are all about. We're going to go over oil ETFs, crude oil ETFs, Gush, Drip, OVX, USO. I have them written out right here for you guys. Let's jump into this video and get started. So I got 4 tickers up right here for you guys. The first one, United States Oil. The second is OVX. Now this is just like the VIX. It's a fear gauge for crude oil. We'll go over it here in a second. I'll show it to you guys on a chart. And then we have 2 ETFs right here, Gush and Drip. So it's important to watch these, and learning about this stuff just gives you more opportunities in the market. The more you learn, the more opportunities you will have in the markets. That's why I always preach, study, 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 guys. This is a business. There's so many ways to make money in the markets. Why not try to learn about all the possibilities and pick which ones you want to follow? There are people out there who just strictly trade oil, follow oil, and that's how they make a living. Same people do it with gold, natural gas, energy, semiconductors. There's all kinds, and I'm going to show you guys a website where you guys can look for all the inverse ETFs. But I highly recommend you guys do your own due diligence, learn about all these ETFs. There's a lot of people out there that are sketchy about ETFs because they're fairly new. They came out in the early 90s, late 80s. You got to look at them as they're trading vehicles. They're not long-term investments. Let me repeat that. ETFs are not long-term investments. They're just simple day trading opportunities for when the markets get shook. Let's go over an example of oil real quick. Here I got the crude oil volatility daily chart up for you guys. You could see here on the daily here, there's a lot of long wicks on this daily chart. All these that I'm pointing out right here. And what these are all opportunities in the market. Just like the VIX. I talk about the VIX all the time. The VIX is like the fear gauge. They first stumbled upon it when the economic crash happened in 2008 with the VIX. They got really high, and then since then, they've always used the VIX as a fear gauge in the market. Whenever it increases, that's when you'll start to see a lot of volatility in the SPY and the NASDAQ. So we got ticker symbol money sign OVX right here, and you see all these wicks. Whenever you see a very, very long wick on this chart, that means that the oil got very volatile. So we can see here recently, if we go back 1, 2, 3, 4 days ago, I'm making this over the weekend, we got a very, very long wick here. From 44, it spiked up all the way to 71, and this was on June 5th of 2019. And I'm going to show you guys and break down how you track all this stuff and how you break it all down. So we got a very volatile day right here on the crude oil volatility index 4 days ago. Next up, we got the United States oil on the intraday chart. You can see right here, it got shooken up a little bit from $11. It sold all the way down to $10.50, came right back up to almost $11, settled down right here, and then there was a huge spike in it right here from 1060s all the way up to 1110. Now if we compare Gush and Drip, which are 2 ETFs that run opposite of each other, what you want to do is try to compare these and trade them. That's it. Plot out levels and go off of the levels. If I zoom out on the charts right here on Gush and Drip, you can clearly see that there was a big sell-off day right here on Gush, and there was a big spike day right here on Drip 3 days ago, right here. And then on the volatility index, remember we seen the big spike 4 days ago? 1, 2, 3, the 4th day right here, that's when you've seen a little perk right here on Gush. And then on Drip, 4 days ago, 1, 2, 3, the 4th day right here, you've seen a big fall to the downside. So let's zoom in on these and see how you could have taken advantage. We'll zoom in right here, and then on Drip, we'll zoom in right here. You could see here on Gush, it was liking to top out all right here at this level. Stock finally gapped up above that previous level and spiked up to this level right here. And then it sold all the way back down, and look at the area where it bounced at. This $6.30 level, previous resistant, is now holding as support, rips all the way up to $6.70, way up here. Now if we do the same thing with Drip, it does the exact opposite of Gush. Gush had a gap up above its resistance that was all right here, these past 3 spikes, and Drip gapped down below its support of right here, and right here. Just comparing these and doing work. At the open, Gush had a rip to the upside, made its high, then it pulled back down. You could see it tested support, old resistance is holding. Drip sold off at the morning, ramped back up, ran into resistance, which was old support right here, and then sold off back down to this support right here. Gush ran right back up from that support up to that resistance right there. Got a little bit of a pullback, and then boom, shoots right up to the upside. And what does Drip do? Rips right down to the downside. And you could see on both of them, after that, they went into a range right into lunch hours. Gush fell off down to the VWAP right here. Drip spiked right up to the VWAP up here. So you see how these two inverse ETFs move pretty much the opposite of each other. Gush and Drip. And this is just another way for you to make money in the markets. When the oil starts to heat up, expect Gush and Drip to start heating up as well. That's why it's important to follow all these ETFs and just keep tabs on them. If ever you hear anything in the news about gold, natural gas, oil and gas, the overall market, the SPY, the NASDAQ, that's when you get opportunities to look at the inverse ETFs and compare them to what they run with. And then if I delete all this stuff and zoom out on the charts a little bit more, you could see the next day even, it had opportunities with a big sell-off right there on Gush and a big spike to the upside on Drip. Let's zoom in here. You could see right here on Gush, it had a big morning sell-off all the way down to $6.10. Then was topping out here at the VWAP. It was starting to make higher lows here, forming an ascending wedge, but then it just broke right through it, and you can see that big surge candle all the way down right there. And then what did Drip do? Drip had a great morning spike to the upside, and then from there topped out, formed a very tight wedge right at the VWAP. And when Gush had that big surge down, Drip had that big surge up. Continued grinding a little bit higher as the morning went on. Gush continued selling off as the day went on, making lower lows. And then Gush came right back up to the VWAP, right up here, and Drip came right down to the VWAP. You see how these just move with each other? I just wanted to present another opportunity to you guys. Make sure you guys do your own research on these. It's always good to learn something new, just like the SPY and the TVIX. Here's the leverage and ETF website directs are on. I will leave a link to it in the video down below. Go to the home page of it. It'll open up just like this. Go to the leverage and inverse ETFs. Click on that, and that's when they'll pull up all these ETFs. You got your daily bear times 1 ETFs, your bull times 2 ETFs, your times 3 ETFs. There's a big list of them. They compare them with what they run with right here. Just like Dust and Nugget. It's a gold ETF. FAS and FAS, that's a financial ETF. There's all kinds of them. Gush and Drip, that's your oil and gas. GASL, GASX, that's your natural gas. There's all kinds of them. And there's even more than these. There's a lot of them that are not as popular as these, so you gotta go through and look through them all. Like you also have these ones right here. Crude oil ETFs. OILU, UCO, OILD, SCO. You got BOIL, KOLD. There's all kinds of them. Just to show you guys, here's BOIL. See how there's really no volume in it. You know, some are more popular than others. BOIL is a natural gas. Let's look at OILU. This is a crude oil ETF. You see how just like the other ones here, it had that big sell-off right here and then a big rebound back up right there. UCO, another crude oil times 2 ETF. Again, the big sell-off right there, big spike to the upside right there. OILD, another one, doing the opposite, big spike to the upside right there, big sell down to the downside right there. But volume's really, really light on this. There you have it. I'll leave links, like I said in the video, of all these websites, and I'll even throw in an Investopedia ETF definition for you guys. I just wanted to open the door for you guys for more possibilities of what's out there to trade. I love ETFs, and I highly, highly recommend you guys do your own due diligence, like I said, and learn about these before you trade them. And remember what I said, these are not long-term investment ETFs. They're day trading vehicles. That's all they are, because all these ETFs are natural decaying ETFs. What do I mean by a natural decaying ETF? This is what I mean right here. This is OILD, a natural decaying ETF. What it's going to do is it's going to keep selling off, selling off, selling off, and it'll only get pops when the market gets shook. Even right here, it'll keep decaying and decaying and decaying, going all the way down, and then when it gets low enough, they'll do a reverse split on it and raise the price back up on it, and they'll reset it, and it'll start all over again, and it'll just decay and decay and decay. These are just opportunities out there when anything ever happens in the market. If there's a crash that happens, volatility really picks up, we get a correction in the market, there's opportunities out there with ETFs that move to the upside. Whatever it's running with is trending down. So if we go into a bear market, these ETFs will trend up as the overall market falls down. Same thing with Gush and Drip. You know, you will see people that will take swing trades on these, but I'm not really too much of a fan on swing trading ETFs. I look at them more as day trading vehicles. Even the owner or the creator of ETFs, who recently just passed away, said, these are not long-term investments. You do not buy and hold ETFs. You simply just day trade them when the markets get shook. But I will probably make more of these videos in the future. If you guys want more videos on ETFs, leave comments down below. If you like the video, hit that like button. It lets me know you guys are liking the content I'm putting out. And as always, guys, have that patience, have that discipline, and study, 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 as always. Alright, everyone. Later.